Uh, okay, I wanted to also say that I was pleasantly surprised by the co-anchor that started this session, and that resonates with me a lot. It also resonates with the topic that we're going to be talking about this morning.
Yes.
I am not sure how much time we have, but I will try to make the best use of the time you are
Very well.
giving to me. Okay, so just a moment. I will put up a slide now. Um, Give me a moment, please. Okay, so I'm trying to, um, I hope I can, do I have the permission to display a slide? I'm trying to do that. Can you, okay, thank you.
Sorry about.
I think it's possible now. Let me try this, okay, share. Can you see my slide? Can you see my
We
slide?
can see the slide. Yes.
Okay, thank you very much.
You're welcome, sir.
And good morning, everyone. Um, I imagine that we are talking to uh, uh, a lot of people here who may be in any part of the nation, and that I am made to understand that I'm talking to solicitors, to learned colleagues, that I'm also talking to women and leaders. So I will just go ahead. The presentation that we're using here, I mean, it's for the purpose of facilitating our discussion, and I hope that the conversation will be as interactive as possible, and you will need to help me to do that, to make it interactive as much as possible. There are about 3 reasons why I personally um, find this um, engagement or this discussion this morning very attractive. One of them is the fact that uh, I'm talking to a group of uh, legal luminary who, and because CBDC we are talking about is a legal tender, so it's a legal instrument. So we are actually discussing an area of interest. The second one is the fact that I believe I'm talking to women, and in era, as we're going to see during the conversation, it's a financial instrument. It's a tool for financial instruments. And then lastly, I am talking to leaders who is looking to empower people. So, and we're going to also see how knowledge is really a part of what we are going to be talking about this morning. Please, anytime that you think that maybe the network or anything has made me to lose the audience, please call my attention. Don't let me be a victim of online joke, so that I will not discover that after 1 hour of talking, there was nobody in the that I was just talking to myself. I hope that do not happen. So I'll just
Very
go
well,
ahead
sir.
quickly. So we are talking about central bank digital currency, something that has become a very popular topic of discourse on global scale today. But be as it may, it's actually not new, that money, which a CBDC represents, is actually constantly evolving. And the popular evolution of money, story of money, is what some of us may be familiar with. But it's also interesting to see that money has always evolved with civilization, starting from even the barter system, when people exchange commodities, when there was no form of units of accounts, and people just look for whoever has something to exchange, something they are interested in, and that has changed over time. And today we use paper money, and even now paper money is gradually disappearing, and we've seen technology in use in various forms, and lately we've seen a more interesting evolution of money in the form of digital currency, and CBDC is one of that evolution. So I'll go quickly. I will try not to be to be too technical, but I think you can also let me know anytime that you think I'm losing the audience in terms of the technicalities of our discussion. So if you look at this page, it's telling the same story about the evolution of money, but it will interest you to know that central banks globally, they have actually been driving money or delivering money to the society for more than 300 years, and that responsibility is seen as a public good policy. So money is not a commercial product; it's actually a tool for public good, and that's what central banks have been doing for years. And if you look at this page, you will see that almost anything you can think of has been used as money at one point or the other. So this money we see today is an interesting phenomenon. Okay, so but from the legal perspective and from the perspective of the legal tender and money as an instrument, there are specific functions of money, so that is expected of a good money, even though that we've seen money being, anything being used as money, and you can say that today, it takes different form, but a good money is expected to deliver some functions, and one of them is that it has to be a good unit of accounts, which helps us to actually keep accounting records, and of course, in Nigeria, the unit of account is naira, and it has to be a good store of value. So yeah, so if you keep your money, inflation is a thief, and it can steal value from your money. So that's why you see that central banks is always responding in the form of monetary policy to ensure that inflation is managed. Medium of exchange, money is a medium of exchange, so, and it must be effective in doing that. So we must be able to exchange values and goods and services using a good money. And finally, this last one is more or less like how the financial institutions, how they reconcile their books. So in terms of settlement system. what are the drivers for central bank digital currency? We are talking about central bank digital currency, and there are questions being raised as to why. A lot of people will say, yes, we already have digital payments. We already have electronic money. I do instant transfer already. So why is this becoming a new topic? So one of those, these are some of the reasons that central banks are looking at this. And it will interest you to know that in some economies like Sweden and Switzerland, cash is actually disappearing. And in those jurisdictions, the central banks in those countries are looking for a way to represent cash to the society in a digital form. So, and you will also notice that during COVID, we learned a very significant lesson in terms of how the cash we love so much may also even become a factor for communicable disease. So, as much as we love cash, there may be situations that may make it impossible for us to retain cash as the world becomes more digital. During COVID, digital payments rose significantly. So people have adapted to a new way of life, and e-commerce is on a significant rise. So a lot of people we prefer to sit in our rooms, in the comfort of our homes, and do all the transactions we want to do, buy everything we want to buy. And we will need a digital money to do that. So another phenomenon is the rise of cryptocurrencies, which in some way can actually expose some unsuspecting citizens to a lot of risk, because of the volatility and a lot of misleading investment toxic instruments that are being promoted by a lot of private entities. If you have been studying the development in the crypto space now, you will notice that presently there is a lot of the market is going through a lot of apocalypse now, because FTX, one of the biggest exchange in the whole world, with a lot of people's money, has just exploded, and there's so much losses that people are recounting. So another phenomenon is the fact that the central banks globally are looking at this. So CBDC is first of all a global phenomenon. Before we even start to talk about it in the Nigerian context. So this slide is trying to put the digital currency in two big buckets, and one of the buckets is that you can look at digital currency as in two buckets. One is private digital currency, and the other one is central bank digital currency. Of course, we're talking about central bank digital currency, but in the other bucket, which is the private digital currency, there are a lot of varieties in there, which if we have the opportunity, we can talk about. Another point we need to observe here is the fact that we may want to clarify that a way or differently from the electronic money you have today, the digital currency we are talking about here is actually money that is digitally native. What do I mean by that? I'm saying that the electronic money that me and you use when we use our card, our payment cards or our ATM and a Master and a Visa card is actually a result of some integration. I mean, so what you have there is a lot of private payment intermediary like MasterCard and Visa card integrating their different systems. So that's creating a lot of challenges. One of them is that that money is not really native to the internet. So that money is a product of integrations that creates some risk, like every time these intermediaries they suffer cyber attack, you lose a lot of your personal data, and they also this process also creates a lot of delay. That's why when you send money across border today from one country to the other, it takes about 3 days. And it's also very expensive to send money through these intermediaries because every intermediary in that chain introduce one fee or the other. So, but when we talk about money that is digitally native, is different. It's almost like this money is not migrated to the internet. This money is native. It was born out of the modern technology. And one of those modern technology we can be talking about here is the digital distributed ledger technology, which is some of us known as blockchain. And some of us who are technologically inclined, we also may have heard about new technologies like smart contracts and tokenization and the rest of them. So now let's talk about a lot of people, because cryptocurrency was a phenomenon that was becoming popular. So people may have had interaction with it at one point or the other. So when the central bank digital currency emerged, one of the most popular questions was actually what is the relationship between them? And this slide is trying to differentiate them. So from the perspective of issuance, legislation, and liability, you see, we are having some legal conversation here, and if solicitors are in better position to understand what we're talking about here. So the CBDC is basically the issuer. It's when you're talking about digital currency, so it's very important to talk about who is responsible for issuing the money, and on what ground, and based on what legal backing. Okay, so that's what this slide is talking about. So CBDCs are issued by central banks and is backed by the law of nations or nation where it is issued, and is a liability of central banks wherever it is issued. While on the other side, cryptocurrencies, it's a phenomenon that is interesting. It's not issued by central banks, but some of the interesting perspective is that is actually issued by the cryptographic technology that underlies it, and in terms of a legal tender, it's not backed by law. And when you ask whose liability is this, especially in the case of Bitcoin, so for most of the time, it's actually a liability of nobody, depending on the category we're talking about. So I'll go quickly to now we have moved away from the comparison, and we are looking deeper into CBDC. So there are two ways to look at CBDC when you are looking at the way they are being used. I mean, the purpose they fulfill, the function they perform. One of them is retail and the other one is wholesale. So retail is actually when it is being issued and used by the general public. So we call it general purpose CBDC. But the other variety, which is the wholesale, is when banks and other financial institutions among themselves, when they repository their books, and they also do a lot of financial transactions among themselves, and in most of the time, this is facilitated by the books of the central banks in some multi-party environments. So the CBDC in that form exists in the form of wholesale. We can come back to this if we have enough time. Let's quickly look at the benefits of central bank digital currencies. There are just too many of them. In fact, if you ask me, I will say it's too good not to have a CBDC for a nation. Just a quick run through. It makes payment more efficient. It can help the government who wants to increase their tax base by delivering value to the public. I mean, when you empower people as a government, you also the government also gets the feedback from that empowerment. It helps to improve monetary policy. I mean, when central bank issue their policies, it becomes more effective when CBDC has a potential to make it more effective, especially through financial inclusion. Safer financial instrument, I mean, it can bring more safety, it can deepen financial inclusion, which is one of our key subject of discussion today. It can reduce a lot of risk from private currencies. It saves a lot of cost. And I mean, from the perspective of cash management, I mean, that cash you hold in your hands and you love a lot, it will interest you to know that it costs a lot to maintain and to issue those cash and to keep the and to also make them fit for purpose. Illicit activities, which in the form of money laundering and the rest of them, CBDC can reduce that. It can stimulate economic growth, and it can promote cross-border payments, improve local currency traction. That's by reducing dollarization, and it can help in environment sustainability. Is green finance. I mean, sustainable environment, reducing the cutting of trees. CBDC can help because every cash you hold in your hand is a product of a tree being felled. So let's look at another perspective of the benefits from economy, government, and other stakeholders. This slide is saying the same thing with the one we just left, and it's just saying it in another way. So to save our time, we can move ahead. Please let me know if I'm moving too slow or too fast. I just want to make sure that we're having a conversation. So it will be incomplete to talk about CBDC without talking about some potential risk of introducing CBDC. So And these are some of them. And the biggest is about the disintermediation, the fact that the it may disrupt the current setup. Being a new technology and being a phenomenon that is actually giving the public access to cash in a digital form, it may actually create what we call disintermediation, a situation where people may prefer to use CBDC instead of using their banks as we have it today. That's a risk that needs to be managed. This miscalibration of government involvement, I mean, is the fact that CBDC should be issued in a way that empowers the people, not to take power away from the people, to be specific. There are also financial risks as a result of lack of knowledge. If a government does not know how to manage this CBDC, it could lead to some mistakes that we have consequences, unintended consequences. Loss of privacy. There are people, especially in the developed world, who think that CBDC is going to intrude their privacy, and technology risk is one of them that we are looking at. You know, we said it's a money that is digitally native, and not everybody is digitally savvy. Okay, so there's a transition risk, and people could make mistakes because of the new platform. And interoperability risk is another one. Of course, the way the payment ecosystem works is that there are a lot of players that are interconnected. Now, okay, so I think it's a place for me to just get confirmation that we are together again. Maybe I can hear somebody's voice, and you can just tell me to go on. Hello, are you there?
Yes, sir. We can hear you.
Oh.
Yes,
okay.
the rest, the interns are actually muted, so you won't be able to hear them when they are responding.
Oh, good. Okay, so we can also, they can chat at least.
Very well, yes, sir. They are putting in their chat, yes, sir. We're hearing you perfectly, it's clear.
I see a lot of chat already. Okay, good. Want to guide me in terms of time? Do you think time is against us?
Oh, no, time is not against us. You can take till like 1. It's to run for 1 hour 30 minutes with questions and answers for like 30 minutes, depending on if you're done with the presentation. Then we can go into the questions. So if you still have more to present, you can go ahead. Then we can use like 30 or less than 30 minutes for the Q&A.
Oh, thank you. Okay, I just want to be sure I'm aligned.
Yes, sir. You're on the right track, sir. Thank you.
Thank you. I'll just go ahead. Okay, so
very well, sir.
It will interest you again that many nations of the world has yet to launch their CBDC. That's because the design of a CBDC, it has to be a careful and well coordinated one. And why? Because of what we just talked about. It has advantages and it has some risks that you need to manage, that needs to be managed. Now, the central banks community globally, after a lot of research, they agree that there is no formula that can be given to every nation to say, oh yeah, use this formula to issue your CBDC. That's because there are peculiarities for every nation. So the best they could do is to agree on some principles, underlying principles, to say, okay, whatever you do with, in terms of your approach to your CBDC, just make sure that you are guided by this principle. And these are the three principles that is like, I mean, serving like a guiding principle for most central banks in issuing their CBDC. So, and it says that whatever you do, just make sure that you don't destabilize the current system. So do no harm. Don't scatter the current stability that you have. And in terms of CBDC, central bank digital currency, as an instrument of a financial system, let it deliver it in such a way that it coexists with other systems, that it complements other systems, including cash. It doesn't have to replace them. So, I mean, you don't have to issue CBDC as an instant replacement for even cash, even for POS and the rest of them. So, it should be delivered in such a way that it complements all these existing forms of payments. And things can evolve gradually over time. And lastly, the third principle is talking about innovation and efficiency. So as a digital currency, CBDC should create room for private sector to build innovation on top of it. So this is where CBDC actually can drive the future of monetary system. This is where it can enable a digital economy. This is where it can serve as a driver for transformation in terms of the economy. And with this is just for just for us to see that in designing the CBDC, you have to look at it from many perspectives, from the system perspective, from the instrument perspective, even from policy, institutional perspective. And this is a popular taxonomy of money, and we call it the money flower. And it puts side by side what you can consider as different kinds of money, forms of money. You put them side by side and how they are interrelated. And you can see somewhere in the middle there is CBDC, which is actually a product of central bank liability. It has an attribute of peer-to-peer payment. When you talk about peer-to-peer payment in terms of payment that involves only two people, no intermediary between them, and it's electronic in nature to say. I mean, it's digital, and it's universally accessible. This model is showing how that CBDC, even though digital, it involves the central bank issuing the money, and then the commercial banks and other payment providers distributing the money to the public. That's what it means. Now, let's bring this conversation home to our own Nigerian CBDC. We've been talking about CBDC as a global concept, but let's talk about the Nigerian CBDC. We are all a witness of history when the Nigerian CBDC was launched by the president October 25th last year, and that historical event has taken Nigeria to a new level. I mean, it has puts Nigeria on uh, on a global footprint of the nations that are leading CBDC implementation. So when the president launched this last year, it's important that to understand that it was not a one-time event, and the central bank governor emphasized the fact that it's a journey. And we have to bear this in mind that because it's a new concept, and because it must be delivered in a way to uh, in a way to manage the risk and deliver the benefits, and also in a way to preserve the rights of Nigerians, and also in a way to obtain feedback, give an opportunity for Nigerians to provide feedback as the benefits are being rolled out, so that this is going to be a collaborative effort. The central bank of Nigeria is approaching this as a journey, and in this journey you can see the various benefits and features, functionalities that are in the roadmap to be delivered to Nigeria. And today, a lot of this has been delivered, but if we have the opportunity, we'll come back here to see how this was being approached to actually manage some of the risks that we have talked about, because he actually started with the people that are already banked, and then is moving to the people that are financially excluded, so that in a way that we are learning our lessons, and then we are improving on that. Now, today, like I said, Nigeria is a leader in CBDC. Anywhere CBDC is being discussed globally, and I say it again, globally, Nigeria is mentioned as a leader. And that's because Nigeria has it is the first in Africa, but even on global scale, among the CBDC projects, Nigeria is one of the few you can find that is in live operation today. Even China, who started much earlier, is approaching it as a pilot, but Nigeria is fully launched. And Nigerian CBDC is actual opportunity for African economy to consolidate and to expand. So that's something that that has given Nigeria a good image globally, and we are all a stakeholder in taking that forward today. That journey that has yielded this result actually started with this when the central bank governor announced in 2021, around June, that Nigeria will be given a central bank digital currency. As lawyers, as solicitors, it's important for us to know that the first order for any CBDC to cross is the legal order. So because CBDCs because CBDCs are legal tender and they are legal instruments, they can only be issued if there is an enabling law. And this speaks to the CBN Act that is enabling the issuance of the Nigeria legal tender in digital form, and that's section 19 of the CBN Act 2007. And I think lawyers will would be interested in that. Nigerian CBDC, the project name is Project Giant, and the name of the currency is Inera. And in terms of why are we doing this, these are some of the reasons and more. So if we, financial inclusion is the biggest, and we are coming to that very quickly, but I think the picture speaks better. Imagine that during COVID 2 years ago, that there were funny scenarios of money being moved, physical cash being moved in trucks to the nooks and crannies of Nigeria in an attempt for the government to actually deliver welfare to the affected families. And you know, any manual process with cash like that is always characterized by issues. So CBDC can actually enhance this process a lot. It can bring transparency in, accountability, and government will be able to deliver welfare directly without any intermediary to their citizens. Diaspora remittance is one of the biggest value that Nigerian CBDC has the potential to deliver. Most of our people are abroad, all over the world, and Nigerians abroad are always they are interested in investment at home and in their people too. So they always have the need to send money home. But the existing channels for sending money is very expensive. The process is also, it has a lot of delay. It involves a lot of risk, and it makes it impossible for you to send small money across. For example, look at $1. To a woman in the village, $1 is a lot of money. But because of the charges that you need to pay to send $1, you won't be able to send $1 because the charges will even be more than the $1. So these are the problems that CBDC can solve. Imagine you can send money, small money. You don't need to have big money before you send, because Nigerians over there, they don't have it, or they just also struggling to raise this money, and then they don't have to have big money before they can send money to their loved ones. This is speaking to the financial inclusion. So about 40% of Nigerian bankable adults are excluded today. And if you look at the final report on financial inclusion in Nigeria, that speaks to the figure in terms of the achievement so far in financial inclusion drive. 80% of, in the drive for financial inclusion, Nigeria, the central banks and the financial system, we targeted 80% in 2020, with a lot of effort deployed. But at the end of 2020-21, the figure for inclusion landed around 62, I think 64%. 64%. So which still leaves close to 40% of Nigeria excluded. And that's too much by any standard of any nation. About 40% of Nigeria not having access to financial services is too much. And it will interest you to find out that a new target has been set for 95% by 2025. I think 2024, and something needs to be done differently. And central and CBDC is one of those things that will help us drive that inclusion. We have talked about how the cryptocurrencies could expose people to risk, cost of cash management. All this has been discussed. Money laundering, corruption, CBDC can help to reduce all this, even terrorism. And we know that this speaks volume to the challenges we face in our nation today. Now, we are still talking about the Nigerian CBDC. And in the journey that has started, the Nigerian CBDC has been introduced in a way to address the following, what we have on the screen presently. In terms of so micro payments, change is a lot of problem in Nigeria, and that can create artificial inflation. So when I want to buy TomTom today, somebody will tell me that one TomTom is 10 naira, and you will find out that that's an artificial inflation, because in terms of value, that TomTom is not supposed to be more than I don't know, maybe 2 naira. But because over time, a lot of people, they approximate because there's no change. Okay, I don't have change, so they will make TomTom 5 naira, and then before you know it's 10 naira, then before you know it's 20 naira. So CBDC will help address such issues in terms of low transaction cost. In terms of one of the challenge with financial inclusion today is the fact that when you do electronic transfer, you pay charges. Some of those charges are not friendly, and there's a need to and for people who are low-income earner, this could totally exclude them from the system. And there's a need to correct some of these issues in order to drive financial inclusion. Payments need to be instant, and we need money that can catalyze digital economy. Several nations are reaping benefit of digital economy today, and we don't want to be a consuming economy of in the digital world, where all we do is to buy and then be a loser in that system. So we should build our own digital economy. Now, INERA is designed for Nigerians. We said it's an instrument of financial inclusion. It's a tool for financial inclusion. And in its design, these are the attributes. If you look at each of the attributes, they actually are targeted at achieving the objective. The goals of the Nigerian CBDC. And the first one is legal tender, which resonates with this audience today, because it's a legal instrument. So it's the right of every Nigerian. And it has parity of value. 1 naira is one naira is 1 naira. It's not a commercial product. It will coexist with cash. Your 1 naira is your 1 naira. So you can exchange them for one another. And the two-tier approach that is taken is to ensure that the banks, who are the agent of financial intermediaries, interventions, that they continue to play their role. So central banks do not bypass the banks in delivering CBDC. So if central bank issue the CBDC, the banks distribute them to their usual customers. The only thing is that in cases where the banks have not been able to cover all Nigerians, some people are not covered by the banks. the central bank is intentional to ensure that nobody is excluded, as we say that it is the right of every in Nigeria. So that's why it's for both banked and unbanked, whether you are banked or you are not banked yet. But it's also in order to manage your privacy and to manage the risk of fraud. It has transaction limits, and also in order to make sure that people do not move all the money in the banks into CBDC. There's a limit to how much money you can keep in the CBDC, and we will come to that very soon. It's designed to strengthen anti-money laundering and counter to counter financing of terrorism. The settlement is instant. It's like cash. You give me the money, it's mine. You don't need. I don't need to go through any bank. In terms of when you transact between two people, the money move from you to me. Safety. Central bank money is the safest form of money anywhere in the world. It's the central bank, the same thing I've just said. You see the chain of activities, how CBDC is issued by the central bank, moved to the financial institutions, and then the businesses and individuals are covered. So these are the principles that that the Central Bank of Nigeria has identified to ensure that our CBDC is resilient, is inclusive, is innovative, efficient, and is proudly Nigerian. And please, I think I'd like you to pay attention to the fact that in era, if you don't have a wallet, please try to download one as we speak, and try to see how interesting this gift that has been delivered to Nigeria is. There is also, when we talk about proudly Nigeria, it supports about all the it supports the three Nigerian languages: Igbo, Hausa, and Yoruba. I mean, that's interesting to me. It should interest every Nigerian, and that's important for financial inclusion, because even you don't have to speak English before you use the Nigerian CBDC. And I think it also supports Pidgin English, just before I forget. Two-tier approach to just make sure that the banks, the financial institutions are also driving this. Government is the role of government in the economy is also covered, because the Nigerian CBDC delivered these tools to these various stakeholders, from financial institutions to government to businesses and to end users. The wallet are in tiers. So when you download the wallet and you try to onboard, you will have to choose a category in terms of the level you want to operate, whether you want to operate at level 0, level 1, level 2, level 3, which is what we put here. Because some information will be collected from you for identification, which we call KYC, know your customer. And for people who like to start small, who like to start small in the approach of testing, they may start with supplying just their phone number, as long as it's verified with an NIN. That can give you a tier 1 wallet or a tier 0 wallet. You can even use USSD, and then you can upgrade from one level to the other over time, which will allow you to keep more money in your wallet, and also be able to do more transactions depending on the level and the tier you are operating. The merchant wallet has no limits. So when we say merchant wallet, we're talking about businesses. They also have a wallet. So when you go to ShopRite to pay for Inera, the ShopRite also have his own Inera wallet, speed wallet. So which allows you to just scan a QR code and then pay. And for the ShopRite and any business today, there is no limit to the amount of how much they can receive and keep. And I encourage all of us, even this association, to open their wallet today. Inera, a tool for financial inclusion. So I think I like to use this as I believe that we are still together, and this is the last.
Yes, we are, sir.
Oh, thank you. This is the last section, so we'll soon be done. In case it's getting too boring.
Oh no, it's not, sir.
Let me just.
We're really following and enjoying.
Okay, good. Okay, so we'll soon be done, and then we can be interacting now. I personally prefer to interact. Okay, so as a tool for financial inclusion, which is one of the area of interest that I think this audience is looking at. When I met Madam Deborah in Lagos, we were actually talking, we're talking about women, and especially women that are not, that are financially excluded, and how that whatever that is the future is bringing is actually not against them. So let's look at Inera as a financial inclusion, and I think we should also we should appreciate, or let me say that we should encourage the central bank in the sense that the central bank has actually prioritized out of all the objectives that Inera was targeting. Financial inclusion is they've made it the primary focus. And so now, when we talk about financial inclusion, what are we actually saying? So it just means that that people of all cadre and of all level of income and of all tribes or whatever you can think of, that they have access to financial products and services that meet their need and also deliver to them in a responsible and sustainable way. Let's look at some interesting deep dive. If we look at it in components, so when you are talking about access to the financial system, so you want to bring a lot of people from if you look at Nigeria, you will notice that a lot of economic activities happen so the informal sector, the informal financial sector in Nigeria is still too significant. The economic activities that are not recorded, that are not captured, is still about 30%, and that's a lot. And so, when we're looking at how will CBDC do this job, it's good to understand that in terms of how it is delivered, the device that will be used has to it has to take care of inclusion. So you don't need to have a smartphone, and you don't even have to need to have internet to use a CBDC. A CBDC that is driving financial inclusion should, even with a Palasa with a phone of the lowest quality or cost, you should be able to participate in CBDC. The digital platform itself, it must enable the device. So like the USSD, for example. So with a simple features phone, you can use USSD, and even offline payments with your fingerprints. And the agents, agents in terms of driving financial inclusion in Nigeria and globally, agent network is one of the biggest player. These are people, everywhere in Nigeria today, you see people with kiosk, with POS everywhere on your streets, in the villages. These are agent network, people that takes financial services to the interior and to the financially excluded. So these people, the agent network has to be part of CBDC, and they have to be able to give my grandmother in the villages services just with her fingerprints. She doesn't need to be sophisticated in any way, or to even be able to use a phone. So in terms of figures globally, we can come back to this, but this is talking about statistics. When you want to break down how well financial inclusion is doing globally and account ownership. But I think for us, we can save some time by just looking at what affects us in Nigeria. So speaking about the progress, this agent network, you know, I mean, you can tell for yourself that the number of kiosks on your streets or around Nigerians is growing by the day. From 2017 to today, I mean, the agent network, it's not even the kiosk I'm talking about now. I'm talking about the entities that enable those kiosks to happen. That agent network has grown significantly from about 155,000 to about 1.5 million today. And the broadband penetration is also part of that. I mean, the GSM network. You know that all those POS use SIM cards, and I mean, I think the Ministry of Communication and Digital Economy is doing a fantastic job in terms of network penetration. And you know, cell phones has increased significantly. 89% of Nigerians have cell phone or have access to cell phone. I have heard about some interesting setting where the village head, you know, everybody, you know, if you can send money to message to anybody in that village with the phone number of the village head. So it's a shared phone number. So you can reach anyone in the village through the village head. I think it's an interesting phenomenon too. Only 45% of women are using formal financial services today. So women, I mean, is a big stakeholder in CBDC. And the Nigerian CBDC is targeting to actually deliver a lot of benefits to Nigerian women. And only 28% have access to digital financial services. 38.1 million of Nigerians. So these are figures that we spoke about before. So most importantly, there's a need, there's a gap to be filled, and there's need to do something differently from what has been done before. So in era CBDC is actually presenting a lot of opportunities to take the sources of financial inclusion to another level. So, and it's looking at it from different perspectives. even from barriers perspective. It needs, I mean, beyond just talking about it, it needs to actually address it from the different barriers, like the geographic barriers, institutional factors, the economy markets, factors, structure. So, and these are also barriers that we are talking about, the characteristics of the vulnerability that you are looking at. So we'll be looking at different demographics, the old people. So if you want to address financial inclusion, you don't want to leave the old people out, and you are not expecting them to be interested in your technology. So whatever technology you are delivering, like offline payment, for example, we should be able to use their fingerprint. And with people with low financial literacy, they should, I mean, as we even try to increase literacy, we should also design the CBDC to target them. Trust is another one. So in situations where you have to use CBDC to improve the trust, because the existing system may have created a lot of people don't want to, they complain about the banks, and they believe that anything has to do with some of these issues. So financial inclusion. So we have talked about what CBDC means for financial inclusion. So it has to be a good store of value. It has to be a good unit of account, and it has to be a medium of exchange. And that's what central banks are targeting. And if you look at this objective, like I said the other time, these are figures we have talked about. Financial inclusion, I mean, Nigeria, we have other benefit from CBDC, but financial inclusion is the biggest that CBN is driving. I have spoken about this wallet TS before. So you can take a gradual approach, and you can use USSD. And this is also speaking to how those problems will be addressed in terms of, so from trust perspective, the CBDC will, it has to be reliable, and it has to deliver instant payment. It has to assure irrevocability. So it has to incorporate offline capability and online too. So you don't need network. 247, 365 1/4 days. CBDC has to be available. The business hours, the problem of business hours should not be a problem in CBDC. So the bank has closed should not be an issue. I cannot pay you because the bank has just closed, So even if it's in the middle of the night, you should be able to use your CBDC. Instant clearing and settlement, that's for the financial institution. Interoperability is another one. CBDC will help to reduce liquidity management costs. That's from the financial institution perspective. Literacy is one area that is, I mean, those of us in this session, in this forum today can, I mean, we have a lot of role to play in terms of educating the women and the villagers to, I mean, on how they can take advantage of this. So, but from the in-era perspective, the wallet is being, I mean, is being made to be as friendly as possible. You don't need a smartphone. You can just, any features phone will work. You can use USSD, standard 97. Local language is supported. And in terms of interoperability, it is integrated to other systems. So it really, you can access CBDC through other system, including POS. There's now a CBDC ATM card that you can use. In-era ATM card. Your identity is also CBDC is riding on the national identity, the NIN, the BVN. So in-era is integrated to ensure that financial inclusion is taken care of. These are just some interesting pictures that shows the adoption drive by the Central Bank of Nigeria. Some of these locations are in Lagos. I think this is Lagos. Okay, this one is Balogun Market in Lagos. Just to show you that the central bank is serious about driving financial inclusion. This Teju Market in Lagos. There's a lot of this that the pictures like this from the northern and the eastern part of Nigeria. These are the NYSC camp. This picture is taken from the NYSC camp. So, and a lot of core members today are agents of financial inclusion that central banks is reaching out to drive CBDC adoption. So star 997, I told you, I believe that you have been dialing it as we speak, and it's becoming very interesting, and it's your right. You must take it, and this will continue to get better and better as the benefits are being rolled out. So these slides are they're speaking to how to use the standard 97 and the rest of them. And imagine that you can, filling station today is one of the is one of these places where payment is, it's a pain point. Even POS, even when you want to use POS, that they are sharing, those attendants are sharing the same POS, or it's not even seeing the POS is not working. And then imagine you can stay in your car and scan the QR code right from your car and pay, and then you collect your fuel. This is Rano. Some filling stations in Nigeria are currently accepting INERA, just for you to see how this is growing. And innovation. There was an hackathon event the first hackathon event happened in August this year, where that Nigerian youths, one of the potential Nigeria has is its youth, which is a large percentage of our population. And these youth are looking for expressions. They are full of ideas and talents. And I told you that in addition to financial inclusion, CBDC INERA is actually a platform for innovation and to empower, a tool of empowerment for our youth. And these are Nigerians who are youth of Nigerians who are actually showcasing how they are going to use the INERA as a tool to deliver interesting use cases and possibilities that can transform the Nigerian economy. The Ministry of Humanitarian is constantly having to manage and welfare of a lot of displaced Nigeria, IDP and the rest of them. And the process of delivering this welfare is highly cumbersome. So we have had a lot of interesting progress with this ministry, the CBN and the Ministry of Humanitarian Management. There's been a lot of arrangements now where the beneficiaries of this welfare are receiving or are going to receive these values in e-naira. And that's one of the biggest things that is happening today. And that's big for financial inclusion. I mean, this is the bottom of the pyramid in terms of the society and poverty alleviation. So offline payments is critical for financial inclusion. I mean, that is a no network scenario where you don't have the network. You may not even have a phone. And you can use a card, and you can use, even when you have a phone, you can still use your phone for that offline payment. Or you can have an hardware wallet, wearables, even wristwatch, lockets, chains. They can all be a tool for offline payments. Very interesting. So I think that brings us to the end of the presentation, and it's my turn to to hear from the audience. And these are some of the for further inquiries, you can use any of this. Thank you.
Wow, thank you so much, sir. We really appreciate you, and it's been a very insightful session with you, and I believe same for all the amazing ladies on this platform today. Like Mr. Adeolu has said, while he's trying to attend to questions, please, those of you with questions, type it in, and then you'll be able to get your questions answered. Kindly go and download the e-naira wallet. Like we said, if you must function as a lawyer in this emerging tech space, in this digital economy, you just need to interface with all these things, right? So if you don't interface with it, you don't know how you can help, you don't know how you can have an understanding about it. And if you feel this is simple, at least just start with interfacing. Start from your jurisdiction, understand what is going on there, and interface with the various platforms that are coming up. Then you'll be able to have the information that will give you that source of direction. So please kindly start sending your questions in. And for the few of you that are able to probably enable, I could enable you to ask your questions directly to Mr. Adeolu, or this is highly an insightful session with him. So while we're doing that, kindly start downloading your e-naira wallet. Okay, thank you so much. Let the questions start coming in. Do we have any question? I think I saw someone raise her hand earlier. Are you still available? Yes, Olani. Okay, Olani. Okay, you can talk. Now unmute yourself and ask your questions, Olani.
Yes, good afternoon, sir. I don't know, can you hear me, sir?
Good afternoon.
Yeah, we can hear you.
I can hear you.
Yes, good afternoon, sir. Thank you so much for this. It was very explanatory. I learned a lot from your session today, sir. My question is about, we talked about private currencies earlier, and then we looked at the detriment, or rather the disadvantages that we can find under private currencies, such as money laundering, we have scams, then market manipulation, and even privacy issues. My question now is, does the CBDC, does it also face these disadvantages or these detriments?
Thank you very much. So the truth is that it is actually those risks that CBDC is addressing, to be specific. I mean, to answer your question specifically. So the CBDC is designed as a risk management tool to protect you, the citizens, from those challenges. So, like you mentioned them, market manipulations, fraud, and the rest of them. So the central banks actually have to take very careful efforts to ensure that this does not happen to CBDs. Thank you. You can let me know if you have further
Okay,
questions.
sir. Thank you.
I hope it
Yes,
answers
thank
your
you so
question.
much, sir.
Mm.
Can you hear me, sir?
Yes, I can hear you.
Yes,
Okay,
sir.
you
Yes.
said it.
When you spoke about the benefits of CBDC, you mentioned that it broadens the tax base. Do you mean, I'm not too clear on this, does this mean that it favors the government more than it favors the supposed customers?
Okay, so no, that's not what it means. What it means is that the way that any government can increase its tax is to empower the people. Okay, so what it means is the more people you pull out of poverty, the more people you empower to do business. Imagine that CBDC, through financial inclusion, is able to bring more people who are not who are individuals today with no source of income. If it's able to bring them into the formal financial system, empower them to be able to do something, and then if they are able to grow from just being an individual, they are able to grow into an entrepreneur. Okay, I will cite a very good example. If they become an entrepreneur, the truth is that the more people you pull from poverty into formal financial system, the more the government tax also income also increase. That's what it means. So CBDC is not a tax tool, but it's an empowerment tool. Another interesting example I will cite for you is loan. A lot of women in the villages who are financially excluded, they don't have access to credits, financial credits, even if they want to do business. They don't have collateral. They don't have properties to use to collect a loan. But with CBDC, because of how it's able to manage how is able to manage financial inclusion in locating and identifying this bottom of the pyramid, people at the bottom of the pyramid, and also in a way that it can even, through new technology like tokenization, through new technology like offline payment and smart contracts, it can enable them to use even that jewelries that my old mother and old grandmother has. Even that old jewelries can be used as a collateral through advanced technology to give them access to financial credits. That way, you are empowering the women, you are empowering the people, you are empowering the bottom of the pyramid, and there's no way the government income will not increase. I hope that helps to clarify. Thank you.
Okay, good afternoon, sir.
Good afternoon, please.
I also have a question, and my question is, at some point you mentioned that the central bank's responsibility is to issue CBDC, and the bank's responsibility will be to regulate CBDC and ensure that Nigerians have the right to access it. So my question is, how is financial inclusion driven, especially gets towards the Nigerians who don't have access to bank accounts in Nigeria?
Okay, thank you very much. which is even the highlight of this presentation, is really financial inclusion. So uh, um, just to clarify again, what I said was that central bank issues CBDC the same way they issue cash, but the commercial banks, they distribute, they do not regulate, they distribute. So for example, today you collect your cash, you go into a bank and that's how you access cash. Because the commercial banks, one role they play is to help distribute cash to the public, because you don't go directly to central bank to collect cash. So, but your question is about financial inclusion. That how does, I mean, especially people who don't even have any business to do with the banks, how do they, how does CBDC help them with financial inclusion? So start from by understanding the fact that CBDC is a digital cash. It's not money, it's not deposit in the bank, hands in the bank. CBDC is cash. There are two things you go to the bank to do today, maybe as a young person. If you have account there, most of the time you go to the bank for financial transactions. Maybe you are doing transfer, you are doing other things, collecting card and the rest of them. Another thing you do is you collect cash. You see that cash you are collecting, everybody has access to cash in Nigeria, whether you are banked or you are not banked. Cash today is an instrument of financial inclusion. And that is why cash gets to everyone, whether banked and unbanked. Now, even when you don't have access to financial institution, you can have access to cash. And the example I cited here, look at the one for Ministry of Humanitarian Management that I cited here now, for the IDP camp. Most of those people don't have anything to do with the bank. But governments, through the welfare, so welfare delivery to them, governments deliver cash. But this time around in digital form directly to them. Another one is the agent network that I mentioned, the kiosk on the street everywhere. Those kiosks also, they facilitate financial inclusion in terms of taking money to the people in the villages. So you may not, let me cite an example, you may not have a bank account. My grandmother in the village may not have a bank account, but I have a bank account, but I can send money to her without her having a bank account through the agent network. So CBDC allows you to do that. I send money to somebody who doesn't have a bank account, but as long as she have an identity, the agents, those kiosks, they can deliver money to her, and that's financial inclusion. I hope that helps. But if you need more, I can also provide more examples. Thank you.
Yes, sir. Thank you so much, sir.
Thank you.
Thank you very much, sir. Do we have any other questions? So thank you, Mr. Fadiolu. So I really want to reiterate, of course, you did say earlier, one of my concerns when about the whole CBDC, I know one of it was majorly in terms of the women inclusion. And I recall that, like you said, we spoke about it. And I said, not just the women inclusion in terms of the women that were in the room, in the gathering of the conference that was going on at that point. I mean, for those in the rural areas, for those who are unbanked, and for those who really have no literacy about what digital economy is. And I'm glad that there are some forms of rules and arrangement made in place to be able to reach out to these sets of women, because it is very, very important that we carry the women along. And issues like the money agents, like you said, you can reach out to people in the rural areas, like the grandmothers and the relatives who have no bank, And then those who have no idea how they could go about this whole thing can actually access the e-Naira. They can actually access the money, and then that their interest is actually included in this whole thing. Now, another question I would probably want to pose myself is, now for me, I feel the whole essence of the CBDC, do you think personally that probably CBDC could coexist with cryptocurrency in Nigeria, or we're looking at the situation because, of course, various arguments obtained in the country that, okay, it is with the idea of not going in for the crypto, that's why the e-Naira came about. Can we have like a little bit of your knowledge about this whole thing? What's the essence of the CBDC in terms of the cryptocurrency? Is it here to displace the cryptocurrency, or it's here to coexist, or is it more advantageous for us to hope for more of the potentials that this CBDC offers, or there are still some potentials we can harness as a country to leverage on the crypto space, given that borrowing some lessons from the global perspective?
Thank you very much. I think that's one of the most popular area of questions, and the answer is the fact that in the spectrum of things, we need to know the difference between cryptocurrencies and CBDC. First of all, the fact that CBDC is actually the legal tender. I mean, this same Naira that we are using, just that it's in a digital form. So it's the currency, and even though the Bitcoin and the other cryptocurrency may at one point or the other be mistaken for a currency, you will notice today that the cryptocurrency ecosystem today they promote, the cryptocurrencies today are now promoted as investments rather than currency. I just want to start laying that foundation for our young people to understand, because I am an expert in that space. So first of all, there is currency. Second, there are investments. And that's why today Bitcoin is not being used for payments. Nobody wants to use Bitcoin for payment anymore. You rather use Bitcoin as an investment. I mean, to either grow your profits, or to safeguard your investment, to keep it for long term. But for day-to-day payments, nobody wants to use Bitcoin for that purpose. Now, in terms of the relationship, you have to understand that the cryptocurrencies, even though when they happened, there is a lot of knowledge, there's a lot of confusion about how what it represents, what it means to the people. But today, you will see that space where a lot of experiments are happening. There's been a lot of incidents, a lot of challenges that has helped us to understand better that some of these experiments, there are a lot of lessons that have been learned, that what you call a national currency, or what you call a payment instrument, that a cryptocurrency actually is not able to play that role. For example, only in this year, you have had a lot of losses of of investment as a result of mistakes or mismanagement of the investment of people by those platforms. For example, the FTX that just happened today, FTX is still undergoing a lot of investigation, and we have seen how because of lack of regulation in that space, how that the people who manage those exchanges have actually mismanaged them. And another one is the Luna UST incident that happened, that algorithmic UST that actually fell from about more than $100 to zero, to minus or below $0 within 24 hours. So when I defined money initially, a good money must be a good store of value. It cannot expose people to the kind of instability that we see in cryptocurrencies. So now, let me now answer your question in terms of what you see as the relationship between CBDC. So CBDC is still new. Cryptocurrency is also new. And like we said, we are still learning. History is teaching us a lot of lessons. It's too early for me to actually draw a conclusion when it comes to how these two and more we interoperate in the future. But from the current research that has been done by some of the international financial bodies, there are proposals that says that CBDC will interoperate, or we have some symbiotic relationship with cryptocurrency. So when you are building the future monetary system, when you are building a new financial system, there is the foundation, and there is the other pillars that you will put. So if there is a proposal that cryptocurrencies and the players they are in that space will embrace regulation. When they embrace regulation, they will be able to build the future values of cryptocurrency on the foundation of CBDC. And when this is done, we are going to see a relationship that is different in the future. But all these are just things that history will teach us, and we need to wait. What we see today is that those two, they are two islands. CBDC is a different island, addressing the rights of their citizens and giving them digital currency, while cryptocurrency is actually a world of a lot of experiments for financial investment with a lot of risk that is happening today. But the future, only the future will tell us what it will become.
Thank you very much, sir.
I hope that helps. I hope that helps.
Yes, it did help, but I'll just offer some a form suggestion, or probably from my background in the research in the space of the blockchain and cryptocurrency. I do appreciate what you and the rest of the team and the CBN, and then of course the SEC are all doing, and the fact that you're all trying to get to study this whole innovation, because it is still nascent, it's still new, we can't rush into it, right? But at the same time, I do also advise a very open-mindedness towards this whole innovation. Take an example, when we borrow from the lessons of countries like El Salvador, which last year, sometimes in September, I would say, actually, accepted Bitcoin as a legal tender, followed by an African country, the Central Republic, the Central African Republic, accepting Bitcoin as legal tender. Are they saying there are no issues to it? Of course there are. But what I think these countries have done, and which actually is part of the things that I find interesting about the space of the blockchain, the cryptocurrency, is the fact that we identify the potentials of these kind of innovations. We can actually be open-minded and see how we can, harness those potentials and not wait for it to get to the full-blown stage, but we can see what are the lessons that these other countries that are proactive towards it and moving ahead of others, what are they doing? What have they said about it? And then, of course, try to relate with them, which I believe, of course, some of the conferences that I've held in El Salvador, I believe, of course, we have representatives from here, there, right? And yes, the disadvantages of this space are quite, they are there, and there is no closing of the eyes to it that there are no disadvantages. But like you said, because it is new, it is bound to have this kind of disadvantages, have some forms of loopholes, which the more we bring in people into it, the more we study it, and with that open-mindedness and with that proactiveness towards it, the more we are able to quickly understand and see the ways that we can, align ourselves so as to be able to harness it quickly and not use the whole time trying to study, right? At the same time, I know that there is a side of trying to protect the masses, to protect the people of a country and of every jurisdiction. And so that issue of protecting would not allow us to just, delve into things like this anyhow. But we can, of course, we have examples from the examples I have cited from other countries that we can actually try to study and draw lessons for, so that we can align quickly. And that is one of the reasons I also stirred up this form of platform, to bring in young, amazing female lawyers to get to understand things like this in the emerging tech space. We see where the errors are. We see where we, even as lawyers, can actually put our own contribution into it. But how can we put the contribution if we do not understand, which is of the reasons I have this platform, to bring in experts like you. We get to understand it. That's why we're encouraging them to download this e-Naira. The other day I was speaking with some persons and they were trying to tell me the various loopholes, the issues they were having with the e-Naira and the rest of it. And I said, you don't throw away things because they have issues. We look for a way to save the innovation. We look for ways to make our contributions to make it better. And so while some of them were trying to say, oh no, to hell with this e-Naira and the rest of it, and I told them, no, you don't say that. What it means is try interface with it. The issues you have, give your feedback about it. If you feel there is no difference between this and the traditional banking, then try to get your feedback across to the necessary authority that can actually make use of this feedback. And then, of course, you need to even understand. Some of them don't understand, and so they judge it from a place of ignorance. So, but by the time we bring people like you, which I really do not take for granted today, to speak to us, it stirs us up the more to be able to read more about it, to get all the slides and all the necessary materials that will help us understand this better and see how we can make our own contributions to these innovations by the country, and then see how we can help also to drive the country to a greater level in terms of every innovations of the blockchain, in the blockchain space. So thank you so much. We really do appreciate your time. And I know that we have learned so much. And of course, the students are asking if you can avail us the slides. And I believe we'll be able to get the slides. But there are a few questions here, which I will just take one while we will take one for you. They say most people are very skeptical when it comes to government engineered projects. They do not trust the government. How can the government get those in the rural areas to trust and use the banks? This is one of the questions, sir.
Okay, thank you very much. The trust, when you open the financial inclusion box to understand it better, trust is one of the elements that you need to address. And if you lose trust, because trust is actually something that is interesting. I mean, you can easily lose it. But if you want to build trust, there are ways you can also build it. Now, people even when they don't trust others, at least they trust themselves. I mean, that's a starting point for trust. So, and that's why people trust cash. Central banks have observed that people trust cash than the banks, if you ask me. So the cash you keep under your bed, at least cash creates a sense of control and ownership. And that's one big difference between cash and electronic money. So, and that's one big difference between CBDC and electronic money, because CBDC in its design is being designed after the manner of cash, even though it is digital. That in being digital, it is being designed in such a way that control and ownership is given to the end user. And wallets, wallet is a phenomenon that is designed after the pocket, me and you, our pocket and our wallet, our physical wallets, which is one way that we control our personal, our assets or keep money today. So depending on the design of CBDC, and it can be enhanced to be as consumer-centric as possible, as people-centric as possible. So how will CBDC be designed to earn the trust of the people in the village, everywhere, is one example I stated when I talk about offline payments. I mean, the fact that the same way my grandmother knows how to keep her cash, you can also deliver CBDC, digital cash, to her in a way that she can keep it as in any form that is attractive to her. For example, she can keep it as a wearable. I mean, as a pendant with a chip inside, where every time she go and they scan it, they can give her money, physical cash. She can also decide to take money and store it inside that. I mean, all these are the ways you deliver trust without necessarily depending on the bank. That's a significant part of CBDC. And trust. If you give people control and ownership and sense of ownership, trust will grow. Even the trust that has been eroded, they will continue to build. And all you are saying here, they are good feedback. Like I said, INERA is a journey that solicits inputs from the public. So I am actually taking all of them, and I would like us to take the other questions. I hope this one answered the one you just asked. Hello, are you there? Okay, I think maybe you are muted, or I'm not sure we're hearing you.
Hello.
Hello?
Oh, sorry, sir. Thank you so much, sir. The next question.
Maybe it's
Thank you
internet or
very
something.
much, sir. The next question will be, from what you had explained, the Nigeria e-Naira seems to be built with a centralized financial system. Does the whole concept of digital currency implies that it has to be decentralized? What then is the difference between the concept of online banking and the e-Naira? That's the question.
Thank you, my dear, very much. Yes, that's one of the most interesting questions that has ever been raised. The level of decentralization. So when we speak about digital currency, there are a lot of things that come into the design. And centralization versus decentralization, distributed in terms of the ledger, these are things that comes into question. Whether you are delivering CBDC as an account-based, token-based, whether you are delivering CBDC in the form of whether you're using blockchain technology or you're using traditional technology. All these are questions that comes into play. Now, a lot of people are interested in saying that if the banks, the commercial banks are still the one driving this, then what is the difference? And the answer is this. I want you to pay attention very closely to when I talk about this intermediation the other time. The banks, it will interest you to know that even the banks see CBDC as something, as a risk to them, something that could take power, that could take their customer away, that will empower the public. So the reason why we may be seeing CBDC as the same thing as electronic money delivered by the bank is because we are yet to understand it. And the only way to, the simplest way that I have found to explain it is to compare cash, to look at cash versus money in the bank. The cash in your pocket, you are in total control of it. The money in the bank is with the financial institution. Now, the cash in your pocket, when you talk about CBDC, that your wallet that you download is actually not the commercial banks, they don't have access to it. I want you to hear this again. And I want you to hear that the ledger, the ledger on top of which the Nigerian CBDC is delivered is actually a blockchain. You can go and research, you are young people, Hyperledger blockchain is used to deliver Nigerian CBDC. And that ledger has no intermediary. All in-era transactions are peer-to-peer, and there's no intermediate. Even the Central Bank of Nigeria is only a custodian or an overseer of that platform. It does not intermediate in a transaction between two people. So those wallets, of course, they are digital. No matter how cash-like they look, they still need to be delivered in a digital form. And wallets are the ways that technology is giving customers or consumers or end users control over their digital assets. That is not only peculiar to CBDC. Even in cryptocurrency, you are already familiar with wallets. So the Nigerian CBDC is built on blockchain. It is delivered as transactions in eras are peer-to-peer transactions. There's no intermediary. The money in your CBDC wallet, your bank, financial institution, they don't know, they don't have access to it. And that's one of the reasons why they are not, they are looking, they see this as a risk. The money is in your total control. And let me say this to finalize it. When a bank fails today, or historically, anytime a bank fails, people lose money. And the only way that the law protects you is through the insurance. And only a portion of your money is through the what do you call this institution? There's an institution that insures our deposit with the bank. So that money, you can only be able to access a portion. If you have 200 million in your account today and your bank go bankrupt, actually, I mean, the law will only be able to give you up to 500,000 of that money. That is the deposit insurance that the law has covered. But in CBDC, 100%, you can never lose your money. That's what we mean by central bank money is the safest form of money. It's as good as cash. And that's one of the reasons you will look at that the money in your wallet is not in the bank. It's not with the bank. Banks don't have access to it. They are actually cash in your pockets. And in terms of decentralization, when you talk about decentralization, the intermediaries, it means that the intermediaries are eliminated and it's a peer-to-peer transaction. I hope that helps, but I will be available to have this conversation even deeper on one-to-one or beyond this session. Thank you.
Thank you so much. Yes, that has been an amazing time. Please, if we didn't learn anything, we should learn the fact that the CBDC is the money that is safely managed by the central bank, and that the traditional banks that you have no access to your money. And so it is money in your pocket. I guess I'm in tandem with what you said, sir.
Very
and one
correct.
other thing, that this CBDC is built on the blockchain platform. So what does that mean? That it is immutable, that the same advantages that the cryptocurrency will give you by being built on the blockchain platform is what the CBDC will give you.
Exactly.
So it is different because people have been so confused about how is this different from the traditional banks? I mean, I saw someone who was arguing actively and was like, this is rubbish, this is this. And I said, you just need to sit down, study this and get to understand it and ask questions. And I'm glad that we have the eNaira uncle here today to teach us on this. So if you have further questions, please, let's put them together. And I'm sure he'll be able to attend to the at the time. We have spent quite a lot of time, and most of the students are already leaving. And I also know that he should have another schedule for himself, so we can't hold him here indefinitely with the questions. We can put them together and then I'll send to him. I really do appreciate you, sir. I personally did learn a lot from here today. And I know that I will be able to have your support again in subsequent times. This is highly educative, insightful, and an eye-opener for us. And for me, that day after we spoke, I had to meet some of your mentors. I opened my own wallet. I did. And I've been trying my way around it and all that. So let us do that, please. I'll follow every one of you and the rest that were not available here today on the WhatsApp group that you should get your eNaira downloaded. And let's see what we can do to help and make our country better. It's enough is enough to complain. It's now time for us to interface, see where the issues are, send our feedbacks, send our advice, and we will get our country to where it belongs, and then we'll be able to represent even on the global scale. As women, we have that power. Let us educate also more women, not just women that have access to school and to all these digital devices that you have. We should have the interest. I did say from the onset of this program in 2020, when the Lord laid it in my heart, that the vision is to reach out to women, empower them in this digital economy. And not just women that have access to this, but also women that are underrepresented, the unbanked, the women in the rural areas who cannot even understand the English, or even when they speak it in their language, the whole idea is still confusing to them. So in the various schools where you have the remote aspect of it, right? You can start by contributing and exposing one person or two persons, women in those backgrounds, about this whole thing. And then I am so grateful to the CBN for this innovation and for having women in mind. So for the financial inclusion that they have tried to make provision for women that are underrepresented, that are unbanked, this is a great thing. And I know that with God helping us, we'll get to a great level with this whole innovations and the other innovations that we hope that the country will be able to align fast and be proactive about. But this is the right step to the first step towards the right direction. I would really appreciate. I appreciate you, sir, Mr. Adelufadele. The Lord bless you. Thank you so much. And please, we would like to have the slides. I will reach out to you, and then I guess I'll be able to get that. Thank you so much. We, on behalf of myself and the whole interns, and of course my daughter here, we say a very big thank you to you, sir. Thank you for your time.
Thank you. The pleasure is mine. And
yes,
I I mean, I look forward to interaction with you again. And in this, we are